Short-term update, something I haven't covered in a bit for Freeview, and that's the ongoing bull market in US stocks, the big corporatocracy, the nifty 50, the ones that cut the tax breaks and can bring the money back in after a decade of building up profits offshore, etc., etc. We've been seeing a lot of inverted HVFs on small, medium-sized equities. And the main pointing to a bear market certainly just below the surface for most shares, but the indices being kept up on the big corporates. And what are we seeing now? Well, it's catching up with even the big boys now. We got a very ascending HVF, which shows that too many people buying through the pattern, close to the end, overperformance, a little bit of a squeeze and a little pop higher with a gap. And then you got this HVF, the RH3s and RL3s you'll learn about if you do a program. Gap up, final target made, big gap down. The minute a funnel of an HVF is run, it means you've reverted bear. By the way, that is a 280 in terms of how they represent this, so you'll know what that means on the S&P index, 282. In fact, I diagramized this. But what you then get is a rally up on to the funnels. Can't get back up there. That is your right shoulder. That is your left. That is a neckline at 280. The neckline is the low there, and it runs through the right shoulder here, but it's the nearest logical round number. Then you let go with a gap. You run another funnel. That's very bearish. You can't run it down, and that target is made, and it spills. And then today, everybody closed the gap first. Pump, pump, bull, bull, bull. Close the gap. Smash down new lows, high volume. So there is a general overall risk contraction going on, and it's not just in the cryptos. So the guys that know that I follow, that we have a great methodology, it allows us to assess all markets. In fact, we actually often do non-farm and trade and watch the cryptos. We're looking always to understand the correlation. It's all people, and people are in all markets. In fact, the big institutions and big individual retail investors have shares, and then they decide to buy some cryptos too. So if they're feeling pain, they feel pain. They can feel pain across all boards. I'm also interested in modeling in the event that we have a banking collapse, Mark II, as you're probably aware that I am suspicious we will have, on balance of probabilities, given the conduct of the psychopathic, Trojan, parasitic control structures that continue to reward and allow the continuation of previous sins at the expense of the many. Pretty confident that we'll have that. Will there be an asset class that will go up in the event of everything else going down? Now, if the banks go down, my fundamental thinking is not having an intermediary, aka decentralized money and not involving banks, because we've seen bail-ins already set up. And if you think those deposit guarantee schemes are going to hold, or that there won't be ifs, buts, and maybes on those terms when the big one comes, I think you might want to think again. Trusting government is a very daft thing to do. They don't realize that they don't work for you. They work for the people who put them in power, not you. You are a sheep, just meant to be deluded into believing that you have free choice and that you've chosen somebody who cares for you and stands on the stump for you. My suspicion is that there might be wholesale contractions during the course of this year generally. I don't necessarily saying that this is it, but I'm curious as to, in these periods, what happens on cryptos. At the moment, the cryptos have contracted and were contracting actually before the equities were, but I'm curious if they bottom and then they might rally and become an alternative option if that happens, because they have been contracting for a while, especially if that brings into perspective, again, things like my old friends Deutsche Bank that had lovely inverted HVFs that we called many moons ago, and that fell forever and a day, because it could be the case that being outside of the banking system and having the alternative crypto money wealth will serve you better. So we'll see all about that in due course, but in the meantime, keep your powder dry, and there will be opportunities, but the indices are hurting too. And I wonder if this could be the first smackdown that could give us a nice big juicy inverted HVF for all our guys on the premium boards. You can check the website if you want to join, for which we can try pick a good time to load up on those puts on some of the big corporatocracy shares and also potentially on indices as well. So one to watch. Been weak. I'm far from being quick onto this one. There was a gap down there. I heard about it. I thought, who cares? I'm not that actively waiting for only the really big cyclical moves, and we're starting to get a proper pullback. So what we could do, a nice rally here and then set up a nice big inverted HVF. It could be for a great trade for us at a later point. So keep them in perspective and keep it half an eye. With that, I'll leave you with the S&P looking a little ill, having come off a fair amount, but don't forget how much it's done. So there's plenty scope for more, and it has also been resilient. Shorting indices is a very dangerous thing. You have to get your timing right. So not for the meek of spirit and those lacking methodology and timing. Speak to you all soon.